Welcome, everyone. Hi, Hepsiba. Hi, Ted. Welcome to another edition of TC Live, which we are doing in partnership with Turaco and One Acre Fund. So I'm really excited to have this conversation with you today about insurance tech, how embedded insurance in lending is closing the financial inclusion gap. I just want to take a minute to specially thank everyone in the audience who has joined us on this live, everyone who registered, everyone who sent in questions, and everyone who's just enthusiastic about us getting into the conversation and having a really, really wonderful and insightful time today. Um, so just before we jump right into the meat of everything we're going to do today, so let me just talk us through quickly regarding who TechCabal is and who TC Insights is. So TechCabal, the publication, speaks to the business and human impact of tech and innovation in Africa through high quality articles, reports, and events like this. We also publish the TC Daily newsletter. This event is organized by TechCabal Insights in partnership with Turaco and One Acre Fund. TechCabal Insights is the events, research, and data analytics arm of TechCabal. We are an Africa-focused digital economic consultancy that leverages big data to help startups, investors, operators, big tech companies, governments, and other ecosystem players on and off the continent to answer specific questions and implement key interventions. And Turaco provides simple and affordable insurance products to underserved customers through technology-enabled white-labeled partnerships with Africa's top brands. Now, as Africa's leading Insurtech, their vision is to insure the next 1 billion people, and their mission is to act as a safety net, freeing people from the fear of financial shocks. One Acre Fund supplies smallholder farmers in Africa with the financing and training they need to grow more food and earn more money. Instead of giving handouts, they invest in farmers to generate a permanent gain in farm income. They supply a complete service bundle of seeds and fertilizer, financing, training, and market facilitation, and they deliver these services within walking distance of more than 1 million rural farmers that they serve. Thank you, Hepsiba and Ted. Ted Pantone is Turaco CEO and co-founder, and Hepsiba is One Acre Fund's director and director of product strategy. So just before we get into the conversation, into the meat of the conversation, I'd like Hepsiba and Ted to just talk me through a bit about, their respective roles and vision within their roles in their organizations. So I'm just going to begin with you, Ted.
Yeah, thanks. Good to be with everyone today. I am the CEO and co-founder of Turaco, and we're a Insurtech, as mentioned, looking to insure the next billion people on the planet. And I'm really happy to be able to share a little bit about this great project that we've undertaken with the team at One Acre Fund to insure farmers in rural Western Kenya. First place I ever lived on the continent was in rural Western Kenya in Busia 15 years ago when I moved here from my home in America. And I've sought for different ways to try and support and be involved in that community since then. So very near and dear to my heart, the folks in that part of the world. Often when we're doing product design, I think of my friends who are farmers in Bungoma about what products they would want to be buying and what would be most relevant for them. And that drives a lot of kind of the thinking in our product design. And so, I'm happy to share more about what we're doing with with this great partner, One Acre Fund, but I'll leave it there just as an introduction and hand it over to you, Hepzibah.
Yeah, thank you very much, Ted. I'm sure we're going to get into all of the details in the course of this conversation. So, Hepzibah, can you talk to me a bit about, what your work at what at your company?
For sure. And I will also, as we go into the introduction or the first questions, talk deeper about what One Acre Fund Kenya does. And in One Acre Fund Kenya, the Kenya program, we are known as Tupande by One Acre Fund. So you'll hear me a lot refer to One Acre Fund program as Tupande as we talk through today. And I am also very excited, similar to Nick, around really meeting the needs of smallholder farmers here, especially in Kenya. And I am based in Kenya, currently in Kakamega. And I lead product strategy work within Tupande by One Acre Fund. And what this means really is thinking about what are the different products and services that smallholder farmers are looking for, piloting those different products and services, and rolling them out or scaling them to as many farmers as possible. And the insurance product is one such product where we are continuing to learn and partner with Turaco, both in terms of what kind of product bundle should we offer, or service bundle should we offer, as well as how do we improve that product and service in terms of pricing, in terms of the value, and anything else really, and learning from customers and iterating to make sure that at the end of the day we're providing more impactful services. So I'll stop there for now as well. And yeah, looking forward to the discussion today.
Yeah, thank you very much, Hepzibah and Ted. So as we get into the conversation proper, my name is Kelechi Njoku. I am managing editor at TechCabal, and I'm not alone in this event. I have a lot of my teammates, making sure that everything is going on well in the background. We have the chat room moderator, Victoria, and we have the post-production and article recap writer, also Victoria. Victoria is also in charge of social media and comms, and she's supporting Eniola in the background, working on this as well. And the person who has put this together, our events coordinator, Eniola. So she's right there in the background, making sure that everything is going smoothly, and overall quality control. That is the head of TC Insights, Lanre Oduowo. So thank you to my colleagues who are making sure that all of this is happening and happening very effectively. So in terms of how we're going to go regarding this conversation, we're going to have 30 minutes of a chat, after which, sorry, we're going to have 10 minutes in which Ted and Hepzibah are going to talk to us about how their partnership actually works. And then right after that, we're going to get into a 30-minute conversation where I ask questions and Ted and Hepzibah talk to us about the work that they do in more detail. After that, we're going to get into a 35-minute period where we take questions from the audience. So for people who have tuned into this live, please continue to drop your questions in the Q&A box, not in the chat box, because the questions will not be seen there. So in the Q&A box, and during the Q&A session, I will take as many of your questions as we can take for our guests. Thank you once again for joining. So Hepzibah, Ted, so my very first ask in this conversation is really you've already kind of like hinted on how your partnership at your partnership between both companies, that's Turaco. Okay, fantastic. So I guess that was a glitch. So you've already touched on it, right? So but I'd like you to go into a bit more detail into how exactly your partnership works. So that will really, really sort of like wet the ground for how our audience is going to sort of receive and understand the robust conversation that we're going to have. So I'm just going to begin with you, Hepzibah. So how exactly do you work with Turaco?
For sure. So perhaps I can also give a brief overview about One Acre Fund, or Funded by One Acre Fund program. Okay. We can start there and then dig deeper as you've suggested. So for Tupande by One Acre Fund, we are a social enterprise or a company with a social mission to help farmers improve their harvest and prosper. So we really believe that hardworking farmers are at the heart of the Kenya's economy. And really, you'll realize that majority of our smallholder farmers are relying on small farms to make a living, with 70% of these farmers located in the rural households as well. So what we have realized often is that they have a challenge accessing different farm products and supplies or quality products and supplies, as well as the right resources to really make the most productive output of their current land sizes. So where we come in as Tupande by One Acre Fund is we supply farmers with everything they need to now grow food and earn more money. And how this works is we provide quality products and services all year round, both on cash and on credit basis. So in this case, a farmer will voluntarily select and pay for a product and service, which really empowers them to make a choice about what makes the most sense for their farm as well as their family.
Mm-hmm.
And we have seen also that farmers who choose to work with us tend to have bigger harvests and earn more income from their land at the end of the day. And they also have access to additional products that have potential to strengthen resilience. In this case, hospital cash and funeral insurance products that we're partnering with Turaco on, it's really in targeting the farmer resilience angle. And we see a really good pathway when it comes to resilience with insurance products. And yeah, I think perhaps in this case, like access points or like how farmers access to funded products, we have different channels that farmers can reach us. One is through field agents, where we have about 900 field agents located across the regions that we work in. That is Nyanza, Western, Rift, Central, and the coastal region in Kenya. And any customer can talk to a Tupande field agent and ask them to enroll for a loan product, which includes the insurance products. Similarly, they can also walk into a shop where we have 330 shops spread across these different regions I mentioned. And they can walk in and also get a product just directly on cash, or also be directed to Tupande agent who would enroll them for a loan product. So I think maybe the final thing I would mention there is that we have worked together with Turaco, especially on strengthening both the value and the offerings that we have for insurance products, specifically on health and funeral insurance products. So there is a lot of collaboration around what products we offer, how much it's going to cost the farmer, as well as what's the claim processing going to be. And maybe Ted can talk into the details, of course, of the backend system, where once we have enrolled the farmer on our side, there is really a lot of work as well on Turaco's end to make sure that the product is right, and then also that the claims processing is completed on time. So over to you, Ted.
Yeah, Ted.
Thanks, Hepsiba. Thanks, Kelechi. Yeah, so Turaco is an insurance technology company that is really a full stack insurance company focused on distributing insurance to people in the developing world. So we're operating in Kenya, Uganda, Nigeria, and Ghana currently. We've insured more than 1.7 million people across those markets, hundreds of thousands of which have been through our partnership with One Acre Fund. And the way that we do business is we kind of manage all areas of the insurance value chain. So we design products, we do the kind of actuarial science, more of the technical insurance work around those products to make sure that they're priced appropriately, that the amount of money coming in is more than the amount of money going out in claims paid. Then we do all of the policy administration, all of the claims administration, paying claims directly ourselves. And this is the tech stack that we built to be able to manage that entire flow. Then what we do with those products is we work with partners to distribute them to consumers in the markets where we work. So we work with the likes of One Acre Fund and M-Kopa and Airtel Money and FinTech XYZ, many different fintechs, banks, microfinance institutions, telecommunications companies, anyone that has a strong brand relationship and financial relationship with an end user is a group that we strive to work with. And our goal is to make it very easy for their customers to buy insurance from them. So Africa is not lacking for insurance companies. There's many insurance companies in our markets, but none of them are focused on the mass market consumer, right? On One Acre Fund farmer customers. This is just not the focus of most insurance companies. Everyone's focused on the top 5%, the wealthy populations. So this means that there's not enough innovation around how to serve these customers that are the types of people that One Acre Fund gets to work with. And when we got started in this business, if you had asked me, okay, go back to Busia and rural Western Kenya and sell an insurance product to your farmer friends, like what percentage of them would be interested in buying an insurance product, people that had never been insured before? I would have guessed something like 5%, maybe 10% of people would be interested. We've actually found that it's closer to half the people that we sell to are wanting to buy insurance. They just need the right products designed for them in the right ways, distributed to them in the right ways, that it makes it very easy customer experience for them to buy. And so that's where a partnership with a group like One Acre Fund comes in, where they have an amazing brand, an amazing product offering, and deep relationships with the farmers that they've been working with for years. And we are able to come in and say, okay, your customers really want to buy insurance from you as a part of the offering that you're providing to them. Let us help design a product that has the greatest value for them that we can possibly get, right? Driving profits down as much as possible to deliver the maximum amount of value to customers that we can, and then design a claims management system within the context of how One Acre Fund works with their farmers that makes it very efficient for us to be able to process and pay claims, and distribute it to as many people as want to buy it. So that's where the origin of this partnership comes from, and we work with lots of different businesses like them to do that across our markets. This one has been obviously very meaningful for me for the reasons that I've told you about, but super interestingly impactful in a lot of ways that we're gonna describe in the not too distant future on this call. But yeah, the core of it being farmers want to buy insurance. And that was our big finding. And I'm like, okay, this is amazing. If farmers want to buy insurance, let's figure out how to sell farmers insurance so that they can have more resilient, financially protected lives.
Yeah, that's very interesting. I mean, yeah, when you mentioned that about your big finding. So what I'm interested in now are two things, just following from your answer. Number one is when you say you're designing the right products for these farmers, what exactly does that look like in the simplest terms? And secondly, what aspects of the farmers practice are you ensuring? Is it accidents to their crops or to their harvest? What's going on?
Yeah, it's a great question. So the starting point for us on product design is, what are people worried about? Right? What are the risks in your life that you're concerned about? And if you ask any Kenyan that question, two of the primary financial risks that people are worried about that come up are large medical bills and funeral expenses, right? Someone passing away and needing to spend all of their savings to cover the cost of the funeral, and then even borrowing and other bad practices. And then the large medical expenses it's interesting because people can generally afford the smaller bills that come with just going for a clinic checkup or going to get some medication from the pharmacy. It's the hospitalization stay that lasts for 2, 3, 4, 5 nights that comes in as a $100, $200. I'm converting to dollars for those on the call that are not in shillings in their heads, but those larger medical bills, those are the things that really impact a family and make it hard to make the decision to go to the hospital if you don't have that money available, and make it hard to get out of debt if you do go to the hospital and decide that you need to borrow to be able to do that. So those are our starting point is always customers. It's always, okay, what are people worried about, and how can we design products to help them manage those things that they're worried about? The next point that I'll make on this is, I can't really word it any other way other than insurance really generally sucks around the world, right? Like, insurance products are notoriously complicated, lots of language that's more legal terms than actually something that people can generally understand. And we've just thrown all of that out the window. So we have very simple, straightforward products that you don't need to even understand what insurance is to be able to understand how the product works. So the hospital cash product that we sell to a lot of One Acre Fund farmers is as simple as, if you go to hospital for 2 nights or more, we'll send you a certain amount of money. Any hospital in Kenya that's registered with the government, which is any legitimate hospital, you go spend 2 nights or more there, and we're going to send you some money to cover the bill. There's not a long list of exclusions. There's not a long kind of policy document that you need to be able to understand to define whether or not you can be paid. It's really that simple. And so a lot of the customers that we're talking to, most of them have never had insurance before. And it's an aspirational product, right? Like, they know that the wealthy people in their community have insurance, but they don't really know how it works. So if you just tell them, here's this insurance product, and you have to do this copay, and then we'll cover this percentage based upon a capitation scheme, like, you're going to lose them really quickly. You have to be able to describe a product in very simple terms that someone that's never had insurance before can understand. I mean, I'm in the insurance industry, and I still don't even understand all of the ways that this industry tries to confuse customers to get them to not make claims. But that's a whole nother topic of conversation that I'll bring up in a moment.
Right. Thank you very much, Ted, for that great explanation. So let me just come to you, Hepsiba, right? So I'd like you to walk me through who the typical borrower is for One Acre Fund and what their circumstances would typically are.
For sure. So in 2023, we served, over 600,000 farmers in Kenya. And both of these are, cash and credit customers. About half of them are credit customers. So looking at specifically the credit customer and their profile, most of them are usually between 45 to 50 years old on average, with 69% of them being women, and about 30% of them is young people. And typically, a credit customer is coming in with around 1.5 acres of land under cultivation. And they would spend maybe 73% of that cultivated land on inputs that they purchase from One Acre Fund or Tufande. They grow a variety of crops as well. Majority of them, tend to grow maize, vegetables, and legumes. But you'll also find that they own a few livestock like cows and chickens in their portfolio as well. And what we found in our M&E assessments as well is that 80% of these customers often they report that they're getting, more than half of their income from agriculture. So really, agriculture is a strong part when it comes to income and livelihood for them. Yeah. And most of these customers, especially in Kenya, have, own a mobile phone. So like 99% would have a mobile phone that they can even use for repayment purposes, which we see typically around 37 to 40% smartphone ownership as well, which can be important as it's growing when it comes to communication as well as claims processing and things like that. So that's a typical overview of the credit customer. But I think looking also on the loan aspect, you'll find that for a Supande customer, they would typically take a loan size of 10,000 Kenya shillings, around $75. And in this product bundle, they would take maize and fertilizer, which majority of our customers, I would say over 70% are taking a maize and fertilizer bundle. And they would have additional products, and insurance is one of the products where you find that customers take insurance products, but they're also taking in their maize and fertilizer at the end of the day. And of course, other products that I'd mentioned earlier, like agricultural products, vegetables, legumes, also non-agricultural products like solar or storage bags. So it is a mixed bag around, both the agricultural side as well as the non-agricultural products and services, which we have bundled it in a way, thinking about like what does a smallholder farmer need to make the most out of their farm, but also improve their livelihoods at the end of the day. And perhaps if I can add one more thing as well, majority of our customers sign up for a loan based on the rain season, which we see a lot of them coming in over the long rain season in Kenya, where that's usually between February and all the way to May. And so many customers would sign up for both agricultural and non-agricultural products on a loan at that time. We also see another peak as we go into the short rain season, which is later in September, October, and November. And most customers sign up for all products, including insurance, around these peak windows. But we also offer year-round enrollment, so we see trickling of customers also throughout the year who are taking on all products, but mostly these non-agricultural products like insurance. So yeah, I'll stop there for now, and we can dig deeper into any other aspects of that, the loan process or the typical credit customer.
Yeah. So something I'm interested in after everything I've just heard you say is what are the repercussions, right?
So we, in terms of access to insurance as a resilience tool, really it is a way that customers are able to deal with any financial shocks from hospitalization or death of an immediate family member. And without this, really, the impact of that financial shock can have adverse effects on the ability of a smallholder farmer to manage different responsibilities. And I think some things we've seen, for example, is you're likely to see someone sell off some of their assets. We talked about like the cows, the trees, and others to repay their hospital bills and funeral expenses. And really, I think in one of the reports you'll see from the Turaco's assessment, we were finding that 47% of the surveyed customers were saying they would have sold an asset to cover their hospital cost if they didn't have insurance. And it's something we hear a lot of as well, that if I don't have insurance, then I would have had to kind of sell something to cater for those costs. And I think really thinking about a farmer, they have multiple responsibilities, and some of them are paying upwards of 30,000 and more in terms of school fees, Kenya shillings, and coupled with other loans as well, it's really can have adverse effects around ability to support their children through schools as well. And one that is closer to the work we're doing in Tupande as well, it's also ability to repay the loan on time, where in 2023, the customers that we surveyed on our end were saying, 22% of them were saying they were not able to repay a loan because, someone in their family was sick. And another 6% were saying they were unable to pay their loan because they had a funeral at their home. So you can see how all of these are interconnected. And really the big thing to think about is going back to a typical smallholder farmer. They're really working towards increasing and building their asset and wealth and capacity. So I think such shocks can impact both their ability to manage their wealth build-up, their financial abilities, as well as other responsibilities they have, plus the repayment of loans.
Thank you, Hepsiba. So I have a question about One Acre Fund's decision to embed insurance into its loans. But before I ask you that question, I'd like Ted to kind of like explain to us in the simplest terms what embedded insurance is. Why is it important?
Yeah, thanks, Kelechi. So embedded insurance, there's kind of two ways of thinking about it. One way is you're embedding the payment for insurance into some transaction that someone is already doing, right? So that's similar to what we do with One Acre Fund, where a One Acre Fund farmer is taking a loan for a certain amount of money, and as an add-on to that loan, we're topping it up to pay for an insurance policy as well. So they're taking a slightly larger loan, they're repaying it in the same way that they would typically repay, and that's very important. You don't want to ask people to do something different than what they're used to doing. Then they have the insurance product. So it's embedding the payment for insurance into a different product set. The other way of thinking about embedded insurance is actually just having the insurance as a part of something that someone else is buying. So an example of this is we're selling a similar product with a company called Copa, and if you buy a certain product from them, if you buy one of the specific kinds of phones, then you have an insurance policy as a part of that phone that you've purchased. So that doesn't require someone to opt in and choose to pay for it. That just is a part of that purchase. So there's kind of two ways that we view embedded insurance. Hopefully that was clear. Why it's important is insurance is this interesting product that everybody knows that they want and that they should have it. Once you understand what it is, you're like, okay, I do want more peace of mind. I do want to be able to go to the hospital when I have an emergency, or be able to afford a funeral if God forbid that were to happen. But it's really hard to reach into your pocket each month and pay for it. It's there's a difference between the rational mind of like, I think this is a good thing and I'm willing to forgo some pleasure, right? Forgo some money for the sake of being at peace. But it's very hard to emotionally reach into your pocket and actually pay for it on an ongoing basis. So by embedding the payment and embedding the product into things that people are already buying, you effectively create like a subscription model for insurance where you just make a decision once, I want this, and then you don't have to think about paying for it every time, right? It's fascinating. We get less than 0.5% of people cancel their insurance policies once they've taken them. So it's like very, very few people actually say, never mind, I don't want the insurance. Which points to the fact that people actually do really want this. But if you were to ask them to send you money each month for an insurance policy, you get very few people actually doing it. So embedding it, doing a subscription model is, we found, the only effective way to distribute it at scale to developing world consumers. Yeah, hope that's clear.
Yes, that's abundantly clear. Thank you. And so, Hepsiba, I'm just going to come back to you. So how, what informed your decision to sort of embed insurance into the loans that you give to your farmers?
For sure. So our vision as Pantone is really transforming every farming community in Kenya by delivering sustained food security and pathways to prosperity. And we really think that as we're going to food security and pathways to prosperity, resilience is a strong pathway as well. In this case, for us, we believe that having affordable insurance product is a key part of farmer resilience, which really allows them to better manage financial shocks coming from, the shocks that they would have with hospitalization or death, and also allows them to continue to grow their assets, meet other financial needs, really a continuous way to prosperity that we see. So we came about the offering insurance program from that angle, where we're saying we want to increase resilience, we want to support farmers, even as they're building food security, to continue to build their wealth and pathways to prosperity. And how we do this as well in terms of our loan program. As I'd mentioned earlier, a customer will take on average about 10,000 shillings, so $75 on loan. And they would be able to pay around 10% as a down payment for the loan product. And then they have an 8 to 9 month window where they can repay that loan slowly by slowly, which means that somebody can access the immediate needs right now, like all the inputs for their farm, plus already be taking advantage of the insurance cover for that 1 year, while they're continuously repaying their loan throughout the 8 to 9 months. And we found that this has actually been very helpful in improving the financial ability of our customers, and majority of them end up repaying their loan on time, or on time as well. And perhaps the only additional piece there to say as well is, because they are taking the insurance product there, if there's a shock throughout the year, then they're able to get a payout in partnership with Turaco. And within that period as well, they're getting all these additional trainings and support to improve their farm output. And then also learn more about like how they can make the most use of the insurance products that they're getting as well, like how to make claims, how to, and any other like trainings we offer, including health insurance trainings as well. So it's really a continuous bundle of both the financial aspect plus a training and support, so that they're building both the financial resiliency as well as the food security angles.
Thank you very much, Hepsiba. So I have a question for the both of you, right? So you've already really outlined the kind of like challenges you met in the markets when you decided to, help smallholder farmers in this way. So now I'd like to understand, now that you're actually doing the work, what were the early challenges you faced when you tried to implement insurance solutions, and what lessons have you learned during the process? So I'm just going to ask Ted and then Hepsiba.
Yeah, great question. So the biggest challenges that we faced, I've already talked about demand not being one of them, right? That was a big surprise. I think the challenges are really around trying to find partners that are as good as One Acre Fund. Right. So One Acre Fund is deeply committed to farmer wellness, right? To resiliency and growth of the farmer's personal capital, right? Like this is what this organization is all about. And so very impact oriented. There's very few organizations that are so impact oriented around the continent. So we have to be very creative about how we position the value proposition to different partners. Now, the interesting thing is, when you look at this One Acre Fund partnership, the most value is right for customers, right? There, people can go to hospital now that couldn't. But the very interesting thing, and what we use when we try and work with other banks and financial institutions and telecommunications companies to try and convince them that this is a very good thing for them, is just highlighting this point: 60% improvement in default rates between those that didn't have an insurance product and those that do. And like, there's some selection bias, and like it's not like a perfectly scientific net metric to point out. I was an economist at one point in my life, so I like deeply care about good science, but the indicative difference there is massive, right? It's just much more valuable to have customers as a lender when those customers are more financially resilient. And even when it's just peace of mind financial resilience, I think people make better investment decisions, better opportunities to make money as a family, right? So we use that a lot. And to the biggest challenge is finding great partners that really want to give this the time that it needs to be done properly. And so we leverage the experience that we have with One Acre Fund and some other early partners that we launched with to say, this is actually financially very valuable for you as a decision, not just the fact that we're trying to help people, because we're an impact-oriented company. So we are trying to help people with what we do. If you ask anyone at Turaco what business we're in, they'll tell you that we're in the business of paying claims, which is counterintuitive for an insurance company, because generally you don't pay claims as an insurer to make money. But we're in the business of trying to pay claims and making sure that people get the value that they deserve from the products that they purchased. And that means that we have to be creative about how we grow, because we're not quite as profit seeking as the typical insurer. So all that to say is good partners are hard to find. We're very, very grateful for the one that we have with One Acre Fund, and are always looking for more opportunities and more partners that would align with our values.
Yeah, thank you, Ted. Hepsiba, what challenges are you facing, and what lessons have you learned during the process?
Yeah, for sure. I think there have been many lessons along the way, for sure. And I think it's been great to kind of collaborate also with Turaco to first uncover and also actually work together to address these challenges. And we found that, like having a close partnership as well, where we're saying, this is what we're hearing, and, we can directly talk to Turaco team, and they're like, okay, this is the solution we're seeing from our side. I think that like close connection has made it so much more easy to actually see improvement on the product and service we offer to farmers. And yeah, maybe if I can talk about a few other improvements we've been working together on. One of them is really on the farmer side, it's awareness and increasing adoption of the product. As Ted mentioned, insurance is something that, can be challenging to explain as well. And especially for someone who hasn't been, using the insurance product. And it's been really great to collaborate with Turaco around improving our marketing efforts, both through like the general marketing strategies like roadshows, SMSs, catalogs, but also thinking about how do we even work with the Tupande field agents who are talking to customers to incentivize them to increase or to talk to their customers about insurance products and try and enroll them. So really finding what are some ways we can use in different mixed formats that can improve both awareness as well as adoption of the product. And I think another piece is also continuing to learn from customers when it comes to the product value and feedback they're giving us there. So, for example, in the last year, we had a lot around interest in better value products, or like some farmers being interested in taking additional value products. And we worked with Turaco to roll out a value-based and a premium option for our customers. And I think it's really great to be engaging farmers on the ground to learn about their needs, and then try and see, okay, which options work best and what options can we roll out, and how do they translate to adoption and actual impact for the farmer. So it's a learning experience, but I would say continuous iteration is key.
Yeah. Keep helping your farmers get richer, Hepsiba. I want them to buy more valuable insurance products. It's great.
Yeah,
For sure.
thank you. And speaking of customers getting richer, so often people say that insurance is sold and not bought. So however, sometimes even when insurance is available, the customers themselves really do not understand the extent of their coverage, their own responsibilities around the coverage and all of that, and so on. And so I am really curious, Ted, you're the insurance guy here. How can, companies like yours improve communication and education to ensure that borrowers are aware of their insurance coverage and understand exactly how to use it?
Yeah, it's a great question and very near and dear to my heart. So as I said, we are in the claims paying business, right? Our job, the product that people are buying when they buy insurance is, when something goes wrong in my life, you will sort me out, right? That is what they're paying for. They're not paying for the peace of mind that maybe you'll sort me out. They're paying for when it goes wrong, that's the moment that I need you to show up. And so that's what we do. And that is not the mentality of most insurance companies. So I think from a fundamental mindset shift, I think that needs to change, right? Insurers need to stop looking at claims as a loss to their company. That's actually the term that insurance companies use. They call it a loss when they pay a claim. And that's just mentality is wrong, right? You need to consider the claim as the product that you're actually delivering to customers. So that's what we do as Turaco, and I think that mindset shift needs to happen. I think the second thing is there's just ways to design products in a more simple, easy to use manner than what I think the norm is, right? You need to be able to explain a product to someone who's never had insurance before in a minute and have them actually completely understand what you're talking about, right? You pass away, I'll send your family $1,000. That's our funeral insurance policy. Like it's that straightforward, right? You go to hospital, stay there for 2 nights, I'll send you $100, right? Like that's kind of the way that you have to word things to make it so that people can grasp that have never had insurance before. And I think that is not the norm in any way, shape, or form in the insurance space as well, right? The insurers hide behind actuaries, which are like data scientists designed to squeeze profits out of people. And they hide behind this idea that they should create lots of exclusions on a product to make it so that you can have less claims on it. And I think that a lot of that is malpractice in terms of delivering products that are really useful to people. So yeah, I can talk about this topic for forever, but I'll leave it with those 2 key points.
Yeah, so thank you very much. So I'm just going to ask one final question to Hepsiba before we get into the audience Q&A. I'm not sure why my window is misbehaving. One moment, please. So Hepsiba, how can lenders and insurance providers do even more to increase financial resiliency and protections for informal workers in Africa? So in other words, where are the pockets of untapped opportunity? You're already kind of like conquering it with smallholder farmers. So who's the next step? So this question is actually for the both of you, Hepsiba and Ted. So Hepsiba and then Ted.
Sure. I think there's definitely more we can do even on the smallholder farmer scale, and perhaps, like thinking about how else can we continue to offer more flexibility and, tailoring to the farmer needs in terms of, the amount of coverage, duration of coverage, things like that. Like how can we continue to learn from customers and iterate, which is something we're very interested in One Acre Fund Kenya as well. I think another key piece we've realized as well is farmers are, continue to be price sensitive. And as you mentioned, there's a small pool of, money going around, and really they're thinking about how do I invest it to get the most of the product. So thinking about ways to provide, cheaper products through potentially, growing efficiency and risk sharing could be great as well. I think subsidies could be helpful, although often difficult to achieve as well. And perhaps another thing we think about is of continuously tailoring to farmer needs. So I think there can be more ways to look at this in terms of, are there a combination of products and services that could meet farmer needs? So beyond the hospital cash and funeral insurance, could we offer a bundle of cash loan insurance, knowing that these smallholder farmers are also paying their school fees? Could we offer, more targeted maternal health products, asset insurance, like livestock products, or even improving crop insurance products as well? So how do we bundle these different insurance services in a way that improves resilience as a whole based on the customer needs? Yeah.
Thank you. And you, Ted, who's your next demographic to conquer?
I feel like Hepsiba shared like a lot of really good ideas. So I'll leave her ideas there and maybe take a little bit of a different approach to the question, because I think there's a couple billion people on the planet that need the products that we sell to One Acre Fund farmers, right? Like we don't need a lot of innovation around those products. There's just a lot more people that need them. So I'm very excited to continue to serve this same demographic of rural, peri-urban, urban people in these contexts that just desperately need some way to help better manage the risks in their lives, right? I really want people to not have to make the decision of whether or not they go for medical care because they have enough money in their pocket. That's what drives a lot of who we are as Turaco. So yeah, I think it's expanding that way. One of the things I'm most excited about is the types of numbers that we have from One Acre Fund in terms of the value to the lender of having your people insured means that I think every lender should have insurance embedded into their loans, right? Like I think every MFI, bank, digital lender, alternative lender, whatever you want to call them on the planet should leverage this learning and say, okay, if my borrowers are more resilient, they're much more likely to repay, and the actual value of their repayment is quite a bit higher than the cost of the insurance. So that delta just makes it a very good investment for us, as well as being the right thing to do. So I'm very excited about that, and we're continuing to explore that with more and more partners.
Thank you very much, Ted. That was really insightful. So I am going to go to the audience now. I can see that there are like 1 million questions already in the chat box. Sorry, in the Q&A box. So this one is for Turaco. So it's from Oluwaseun Oyeni. He says, what's the insurance claims rate from farmers for Turaco's product? And what's the default or unsuccessful payment rate on Turaco's side? Because that's usually the worry policy owners have when it's time to use their insurance. There's one problem or the other. Yeah.
Yeah, so a little bit of that is proprietary, so I can't share all of those details, but I can give you some guideposts, right?
Yeah.
The global average in insurance for, like, if you look at a publicly traded company like AXA or one of these big insurers, the typical claims ratio or loss ratio is about 60%. So about 60% of what comes into the company as premiums gets paid out in claims. And for the majority of our partnerships, like what we have with One Acre Fund, we're better than that, right? We pay even more claims than that typical kind of industry loss ratio. I can't comment on default rates because that's not my information to share, and I also know that it's not something that One Acre Fund would be open to sharing. We are very, very careful and manage the proprietary data of our partnerships very, very closely, so that we will never talk about something that is something we should not talk about in that respect.
Yeah, thank you very much for answering that question. So I have another question from anonymous attendee. Now it says, so this is actually for the both of you. So how is this partnership able to provide insurance cover beyond the loan repayment period, which spans an average of 8 to 12 months? So how is this partnership able to provide insurance cover beyond the loan repayment period, which spans an average of 8 to 12 months? So
sure, I can respond to that as well. So for sure. So as you've highlighted, our loan repayment window is around 8 to 9 months. And I also mentioned briefly that the cover, the insurance, hospital cash and funeral insurance cover goes for a 1-year period. So this is what the customer pays for that season that they take a loan. But we really, as Tupande, as One Acre Fund, our focus is continuously working with these farmers for the next year and the next year and the next year as well. So really thinking about how do we continue to improve our services in a way that a customer would want to rejoin the program again the next season. So both in terms of the loan aspect, where for us, we incentivize a customer to come back by, increasing their credit limit as they come in for the next season, which means they can access more products. But then also, if we have higher value options of the insurance bundle that they want to try the next season, then they can sign up for that. And then secondly, in terms of the products and services we offer, which speaks to the, what are they asking for next? So is it a better value product, or are they also okay with what they had previously and that's what they want to see again the next season? Or is it a combination of, the hospital cash, funeral insurance plus other products? So thinking beyond the current season to say what else would a customer need, and from that sense we can now support them to come back the next season. So we've kind of seen this process of improving the products and the service for customers right now to increase retention as a good way to continue serving the multi-year program. Yeah.
Thank you, Hepsiba. Ted, do you have anything to add to that, or do I go to my next question?
I think Hepsiba hit it really well. The only thing that I'll point out is that this is the one challenge in our model, is that if a farmer is no longer a customer of One Acre Fund, then they don't have access to our insurance products anymore, and we haven't solved that yet. So that's the one thing that we're still trying to innovate around. But I still deeply believe that working through partnerships like One Acre Fund is the best way to consistently distribute these types of products. I just hope that somehow Kenya will figure out open banking in a big way, and we'll be able to easily continue to sell products to people over time.
Yeah, fantastic. So speaking of that, I have another question for you, Ted, from the audience. So anonymous attendee says, how do you credit score? In case of defaulters, how do you manage that, especially in healthcare where you can't lock up someone's liver like a phone?
It's a great question. So we rely on the partner to do the credit scoring, right? So we're not taking credit risk ourselves on any of the customers that we sell to through One Acre Fund or any other partnership. So we rely on Hepsiba's amazing team of risk analysts to understand, okay, this person is eligible for this amount of credit, and they do that based upon the fact that they believe that that person can really readily repay over the course of that season or that course of that year. And then we rely on them to say this person can take an insurance product. So yeah, that's the answer to that question.
Thank you. So someone wants to know what are the emerging trends in Insurtech? So I think I want the both of you to speak to this question. That's if you feel like Hepsiba, but I'm just going to begin with Ted.
Yeah, happy to take this. So emerging trends in Insurtech are there's trends and then there's fads. So the fads are less interesting to me around blockchain, and even a little bit, I would say AI is kind of a fad because people aren't really using it the right ways yet. I think the real trend, emerging trend in Insurtech, is a lot of what we're doing around innovative distribution model. So using more than just computers to distribute well, right? So very sad reality is the emerging trend in insurance is not using paper anymore, right? We're going to use computers now. We're no longer going to do paper policies. We're going to store records electronically. And so I think that's the emerging trend still, unfortunately, in the insurance sector. In Insurtech, I think we're all obviously leapfrogging that ancient dinosaur way of doing things. And it's really just how do we take these old school corporate insurance practices and slim them down into something that makes it possible for us to sell a 30 cent a month insurance policy and make money off of it, right? Like that's the innovation. That's really like the core of it to me that I'm excited about and that I see ourselves and a few other interesting companies working on in great ways. I think the other trend would be there's part of the move into kind of mass market, bottom of the pyramid, lower income. There's also some moves into more middle market products, right? Some more middle income products away from kind of the rich people insurance and into, okay, you have a salary job that pays $500 to $1,000 a month. Like, what kind of insurance products would be interesting for you, and how can we distribute those products efficiently? Turaco is not really working on that as much. We're working on more mass market, but there's some interesting innovations that I'm seeing there. And then I will talk about AI just for a minute. So we use AI a few different places in our claims processing journey to make it so that we can pay a claim in a minute / instantaneously, where possible, and where not possible that quickly, at least within a few hours to a day, instead of the typical insurance mechanism, which is 30 days, 60 days, 90 days, as long as they can possibly do without getting sued, right? Like we're trying to truncate that as much as possible so that the farmers that have paid their medical bills can get reimbursed that same day or within a couple of days, if at all possible. So I think those are the more interesting things that we're seeing in our space.
Yeah, that's really interesting. Yeah. Hepzibah, do you want to speak to that, or
Sure.
do I
I think
ask
the
you
only
the
thing I would
question?
add, yeah, given that I guess we're working with the smallholder farmers, the other key thing we care about as well in the insurance sector is, crop insurance and how we can get closer to offering more direct payment to like whatever, well, closer to the farmer field level view of how much, drought or whatever else weather impacts the farmer's yield at the end of the day so that we can offer crop insurance. So that's definitely a topic for another day. But I think that's where we see a lot of tech improvement could really play a key role so that we're not only able to serve larger farms more, uniquely, but we can go all the way to like smaller farms and have more targeted payouts for crop insurance.
Yeah, that's really very interesting. So before I ask you one more question from the audience, Hepzibah, so I just want to mention to everyone who has joined us on this call, thank you very, very much. Thank you for sticking with us up till now. So you're going to see a poll which will appear in, I believe it's going to appear in the chat box. Now that on your screen anyway. Now that poll is basically going to ask you to give us your opinion about, this conversation. How did you feel, or how have you felt so far? Did you find it useful? So it's just 5 quick questions. You just need to tick an option in each. So please fill out the poll, and so that helps us to improve TC Live. That helps us to have a sense of the kinds of quality guests that we'll continue to bring on this live and make it very interesting and engaging for everyone. So thank you very much for joining us. We do not take your time and your attendance for granted. So back to the Q&A. I have one here from Emily Niha. So Emily, I think Ted already answered your question. Ted and Hepzibah already answered your question regarding what it is they find or they found to be compatible between both companies, which has made them to go into this sort of partnership. But I'm going to come to the second question, right? So your second question really is, first, it is praising the impressive numbers of the report that Hepzibah talked about. And so Emily is curious if there are any distinct trends in farmers' insurance adoption or other nuances outside of Western Kenya. Hepzibah, did you
Sorry
get
about that. I had
do I take it
something
again?
on my screen. Yes, for sure. So really great question, Emily. And I think there are definitely, thinking about Kenya as a whole, there are definitely so many different differences for the different regions. So, cultural differences, how they're investing their money, things like that, what crops they're even interested in. So we do see a lot of those differences. When it comes to the insurance product, I think adoption rates vary between different regions, where we might see a lot more adoption in the western parts of Kenya than in some other parts of the country. So I think adoption rates is one of them. We are looking forward also to kind of digging more into the repayment differences. And something that we will be piloting as Supande One Acre Fund will be testing out in a more randomized aspect, insurance product that is fully embedded, where, if you take a loan, you have to take insurance, or another option where it's, by choice, you can just take it if you would like to add it to your bundle or not. So we will be taking that to also dig deeper into the impact on repayment for someone who chooses an insurance product versus someone who, takes it as part of the bundle mandatorily. So there will be more learnings, I would say, coming from the ongoing engagements. But I think the key one that we've seen right now is like adoption rate is one thing that's different in different regions. Yeah.
Yeah, thank you very much, Hepsiba. So just a quick reminder that the poll is still on. So the poll, the title of the poll is Poll TC Live and Turaco. And you just have 5 quick questions, and you can just tick one option in each. And that tells us how we're doing on this live. There's just 3 minutes more before the poll closes. So I think I have gone through every question that the audience has, especially every other question I think was already addressed on this call. So thank you so much, everyone who sent in a question. So what we want to do next now is Ted, Hepsiba, you guys have a report that you sort of like put together, and I'd like you to talk us through that report. What's it about? What's its name? And how did you get to do it?
Yeah, I'm happy to take the first stab at this. So we worked with a research firm called 60 Decibels, which is I think one of the world-class researchers in doing kind of really deep market research in the context where we work. And what they did is a few things. They analyzed as much kind of repayment data as they were able to get from the partnership, and they analyzed a lot of kind of the understanding of what the insurance products were. So they did surveying of 170 of the farmers, like a very deep survey, getting really to understand, okay, why did you buy this product, or why did you not buy this product? What was meaningful about it for you? What was substantive in terms of the perceived value versus the actual value? Those that had claims experiences, what were their experiences, and how are they able to reflect upon them, and what was the effect on their family? So it's a really interesting piece of research as like a first step of research, right? We just haven't ever really done research on this partnership before. So I think a lot of the genesis for this webinar is really saying, wow, the findings on this were significant. And I've already talked a little bit about one of the key findings being that kind of 60% better repayment rate, or like improvement on default rate for the group that bought the insurance product is just very meaningful, right? It's meaningful for the financial value proposition of I believe, at least, of One Acre Fund as a farmer. Absolutely, you can comment and let me know if you agree with that. I think the study that you're talking about doing of kind of doing a bit of a random trial with embedding insurance probably comes out of that finding. I think one of the impactful things for me from the research too is the fact that customers like really just kind of changed the way that they were thinking about their health because they had this insurance product. So 66% of the people that we surveyed in this 177 person group said that their frequency of health visits increased. Now, that's not 66% of people claimed, right? Like very, very small percentage compared to that, like sub 5% of people claimed. But people, because they knew that they had this health insurance, so they could get a claim paid if they managed to, if they unfortunately had to be hospitalized and stay there for a few nights, they would have been able to claim and get that paid because they knew that was there. And this is our theory, right? We will be doing more research on this, but because they knew that was reality, their likelihood of just going for any kind of a health visit increased 2/3, right? Like that's dramatic. And the knock-on health benefits of that, of just having more frequent checkups and a speedier decision point when you are not well to go and see a physician, produces much better health outcomes in general. So I'm really excited. I'm talking to all my economist friends and public health friends of saying, okay, how can we really dig further into this? Because if it does play out to be as accurate as this kind of initial research shows, the actual public health benefit is potentially incredibly dramatic and could pay for the insurance all on its own. So yeah, I think there's the core of who we are is we want to make sure that we're having an impact on people's lives. It's pretty obvious that this product has a dramatic impact on people's lives, and we're starting to do more digging into what that actually means. And this is kind of where the research landed. So reducing people's stress, increasing people's health visits, helping on repayment rates. Yeah, these are like dramatic, specific effects of people having this insurance policy, far outside of the people that we were able to pay a claim for, right? That's obvious for those people, but the less tangible positive impact of having insurance is the thing that we were really trying to scratch at the surface on with this research. And I think we found some really interesting results. I don't know, Hepsiba, if you want to comment on the same.
I think you really captured this well as well, which is, there is a lot that we were able to find from this, apart from the general anecdote you usually hear someone say how having an insurance product has impacted their family. You actually get to see from, surveying a large number of farmers, you can start to see trends emerging and really the value of the product. So for us to, it has been a very interesting report and finding and getting us to think about how do we continue to improve the product, where do we think there are still gaps in terms of the assessments, and how do we try and even dig deeper into those facts. So definitely mentioning into that pilot we're trying to get into is one of the ways we're trying to dig deeper to this report as well, because assuming we are seeing like this specific trends, even as with the randomized trial, then it means there could be a way we change, the loan bundles that we offer, which eventually means, if we're serving more farmers with product, then we can even get much, much lower cost for the farmer at the end of the day. So then there will be like so many, I could say domino effects that eventually leads to, better impact to the farmer. And yeah, we're looking forward to like continuing to learn more from this research and upcoming research processes as well.
Thank you so much, Hepsiba and Ted. And with this, we have come to the end of this really fascinating conversation. Thank you so much for sharing your time with us. Thank you to everyone in the audience for filling out the poll, for participating, for being engaged throughout. I hope everyone found this conversation very useful, very insightful. I think that one of the most interesting things that was said here was how there is a huge demand for insurance, and not just within members of the upper class or people who have white collar jobs, but farmers need insurance. They need insurance to protect their crops, to protect their investments. And Turaco and One Acre Fund have come together in this very beautiful and very promising partnership to ensure that smallholder farmers in Kenya and potentially the rest of Africa get to experience what it is like to have their 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 work and their investments insured in case of any disaster. So feel free at any time to get in touch with them if you're interested in their work in any capacity. So this live has been put together by TechCabal and TechCabal Insights in partnership with One Acre Fund and Turaco, and our speakers have been Hepsiba and Ted. Ted's from Turaco, which is an Insurtech, and Hepsiba helps smallholder farmers in partnership with Turaco to access insurance. Thank you so much, Ted and Hepsiba, for your time. This was really interesting. I really enjoyed myself, and I really got educated from everything that you said. So do you have like any final comments, each one of you, before we dip?
Yeah, I think this has been really great as well, talking and listening and really understanding both from the Turaco side and also like what people are interested in from the audience questions as well. So it's been very insightful conversation for me too. And I really want to, say that when it comes to insurance, the focus, if both of our programs are really focused on farmer impact or impact of customers that we're serving, then there is really no limit towards how much we can do to improve products and services and really grow the insurance portfolios that we have as a program, and also the reach that we're reaching in Kenya and in Africa as a whole. So really looking forward to seeing how this transforms in the next couple of months and years as well.
Yeah,
Thank you.
I look forward to it. So thank you very much, Hepsiba. Ted?
Yeah,
Last.
thanks. Thanks. Yeah, just a last just a thanks to you and TechCabal for pulling this together. I think it was a really fun conversation, and thank you, Hepsiba, for your ongoing partnership and just being an amazing advocate for the farmers that you guys serve, and working with our team so well to help design the right products and distribute them the right ways. It's just been a joy to work with your team. The closing thought that I'll give is, I think that you can do good and make money at the same time. I've been described by friends that are kind of ruthless venture capitalists or bankers in New York that I'm like a do-gooder trying to help people. And I say, absolutely, that is who I am. That is who we are as a company.
Yeah.
But I'm also trying to make money, right? Like our goal is to make profits. I want microinsurance to be as wildly profitable as microfinance has been, right? So that 10 years from now, 20 years from now, however long it takes, every insurance company in the developing world says, we have to figure out a way to insure the poor. We have to figure out a way to insure mass market consumers. Because right now they're ignored, right? They're not customers that most insurance companies care anything about. And my message for them, or for practitioners, or for investors, is there's an opportunity here to make profit and insure low-income consumers around the world. So don't ignore the farmers in rural Western Kenya. They are people that should be your customers.
Thank you very much, Ted. Thank you, everyone. Thank you to our chat room moderator, Victoria, and to our social media and comms people, Victoria and Eniola, who have ensured that this has gone really smoothly. Eniola is also the brains behind the coordination of this event, and she has done an excellent job for us. And also overall quality control. Thank you, Lanre, for ensuring that everything has gone according to plan. My name is Kelechi Njoku. I am TechCabal's managing editor, and I am really grateful that you all hopped onto this live to listen to us. And we hope to see you again next Friday, when we'll be bringing to you yet another interesting chat with interesting people within the ecosystem. And Don't forget to subscribe to TC Daily, which is our daily newsletter, and also to the Next Wave, which is our Sunday newsletter, which lands in your inbox every Sunday afternoon. See you around. See you next time. Bye.